Hi, it's Helen Tarrant. Hi and welcome to another episode of Helen Tarrant with Commercial Property Roadshow. I'm actually here in Oberon. It is a town in regional New South Wales, about 3 hours or so from Sydney, and I'm actually here to see a petrol station and just check out the area. But one of the things here I actually want to talk to you about as I'm walking through town is actually about diversification in your portfolio. So normally when people get into commercial property, people look at a few things. They look at the bright shiny things. So they want to have a childcare, they want to get a petrol station, or they want to buy shopping malls. The thing is, they start about $2 million and they only go up, and sky's the limit. Sometimes you can still get really solid bought properties for around $250,000 in little towns like this, where it's about 3,500 population, and they're performing really well. So there might be a local cafe, it might be some a local financial planning here that's just doing well, and they continue to churn around and tick on, because people here, there's a bunch of tourists that come here, but also lots and lots of locals that come into this area as well. So that's one of the reasons, if you were looking at regional, something with high yield, that's something to consider. But one of the reasons I want to talk about diversification in your portfolio is that I meet a lot of my clients who have properties in one area, especially if you have residential properties. You might want to, a lot of people want to be able to feel, see and touch them, and so that means that you might be, if you're located in Melbourne, you might be buying all of them in Melbourne or Victoria. If you're in Sydney, a lot of them are Sydney, New South Wales based, because for you, mentally, it's about being local. But what I'm trying to say to you here is, if you diversify your portfolio, you have something in regional New South Wales, something in regional Queensland, something in regional Victoria, something in Metro, Sydney, Melbourne or Brisbane, you're actually diversifying your portfolio and insulating yourself against downturn. Because one of the things that we've seen this time with the COVID is that it's actually hit metro areas much, much harder than it has hit regional areas. Regional areas have bounced back. Regional Queensland have not been much affected, and but where we look at Brisbane, Gold Coast, we look at Sydney, we look at Melbourne, they're going to have a bit of a hard time getting back on track with some of their leasing, especially in really central metro areas. So one of the things to really think about is how you insulate yourself going forward in your portfolio, and diversification is key. So the way I look at it is, for example, if you have, let's say start out small, let's say you have $1 million to spend in your portfolio. So that might be, you might have $250,000 in a deposit, and you want to leverage that to $1 million portfolio. Now you might look at it and go, okay, well, I need the portfolio to need to do about an 8% yield. So what the 8% yield means is that it needs to produce you $80,000 in net rent before mortgage. Now, how would you do that? Would you go out and buy one commercial property, or would you go out and buy three? Now, three might be a little bit too much, which means that you might have something that's 250, something that's 300, and something that's 400. Now, that's great, but you got to look at what is the value you're going to get out of that. And sometimes you might not be able to get the same value as if you bought something for $600,000 or $700,000, maybe in a regional area that could be a freestanding property that may have one really solid producing tenant, or one that potentially can be split into two, and then you buy a smaller property, $200,000 to $300,000, where it's just a strata office space or a retail shop or even a small warehouse somewhere in a more metro area. So this way you get a balance. So if I was to do that and I had $1 million in a portfolio, what I would do is buy something in regional Queensland yielding somewhere 8% plus, somewhere that is about 600, 700 up to 750 in purchase price, and then I'll buy something that is smaller, somewhere around anywhere from $200,000 to $300,000 in a metro area in somewhere like Brisbane or Gold Coast, in a small till slab warehouse space where I'm getting a small trade tenant, and that gives me a good spread of both regional and as well as metro properties. Now, if I was looking at leveraging that into a $2 million portfolio, I'll divide that slightly differently. I will buy a $1 to $1.25 million property to start with, so it's a really good solid building, maybe with two tenants, and I could buy that in a fringe area, so fringe Brisbane, or I could look at fringe New South Wales, as in outside of Sydney Central Coast, or maybe fringe Newcastle, Singleton, Maitland area, or I could go into Victoria areas like Warrnambool, and buy something that's really solid around there. Tenant may be producing 7% or so. Then I'll come back and I'll try to divide what I have, which might be 800,000, into two different smaller properties. So I'll buy a metro area for about 400 to 500,000, an office space, maybe a retail space, and then I'll look at a little warehouse property as well. So that's how I would do it for a $2 million portfolio. Now the yields will vary, but what you want to do is look at the aim of getting that property portfolio overall to 8%. So whether you're getting the first one at 9, the second one at 7, or you're getting them at 10, it's irrelevant as long as what it happens overall to your portfolio is that it's 8 and it continues to grow. And that's the most important thing, is that you continue to work that portfolio, getting from 8 to 10 in the next 3 to 5 years. Now if I was looking at leveraging up a bit more into a $5 million portfolio, then I would be starting at 2 million, maybe 2.2 for a first purchase, and I would be looking at potentially and maybe even going up to 2.5 million for a small shopping space, a small shopping complex where I'm yielding maybe 7 to 7.5% in somewhere in Brisbane or fringe Brisbane, where I might have 7, 8 or 10 tenants, where I've got some capital works in the future where I can work on this property as the cash flow comes in, really improve the value, change over the tenants, and really increase the value of that property into the future. And perhaps I could even strata that property in the future if I want to sell them off separately. The other thing is then I would buy something that's like a $1 million, $1.2 million property that may be a warehouse with one solid tenant in there that's in the industrial space. And that could be that it's in it could be regional New South Wales or regional Victoria, or even in areas of the Central Coast where I've got a tenant on a good piece of land and I know that they're solid producing tenants and easy to replace should they move out. So, and then for the rest of it, I'll split them up into smaller areas and definitely look at buying into Victoria and Melbourne, as well as Brisbane, and looking into buying Sydney at a much lower yield. But overall, I want to be able to hit that 8%. And again, the same principles apply whether you're buying a $1 million portfolio or a $5 million or a 10 or 20. And I spend a lot of my time looking at designing portfolios for my clients because I want to get the right mix. Because once you have the right mix, they balance off each other. You can leverage off each other over the years to come and continuously get cash flow and growth. And then you can continue refinancing, pulling out the equity to do more deals in the future, because it's all about the trajectory of the growth and the continuous buying, and then working towards a big goal of getting 10% in your portfolio in the long run. Of course, when you're looking at commercial property, it's not just tomorrow, the next day. It's actually a long-term strategy of buying and strategically putting in the first one, the second one, and all of the ones that follow. So if you need a hand in working out what's great for you and what would work, make sure you go out to helentarrant.com. In the contact us page, reach out to me and I'll jump on a strategy call with you. In the meantime, hit the bell, subscribe, and I'll see you in the next episode. Bye for now.